All right, welcome everyone. Welcome to the Hurley Investments Trade Findings and Adjustments. My name is Kevin Hurley, and I'm excited to go over with you today on a new trade, an old trade, and a very thoughtful question that was asked to me by a friend of mine. That, boy, Bill, I've known you since what, 2008? Someone I think I've known for about 12 years. So, starting out, you'll see what he wrote in here. Yep, 2008. And Lance, you're more like 2010. Okay, I woke up this morning and I saw Disney right at, boom, right at 6 o'clock. Disney's trading at $115.51, down from yesterday being above 116 and a half. So basically I'm like, crap. For some reason I actually thought it was down like 84 or 94 cents. So when I first wake up at 6, I'm actually up around 5:45, 5:30. But when I first look, I get this picture, right? My thought process is, dang, the stock is down about $1 on pre-market on earnings day. I was bummed. And I mean, I basically was thinking, you're kidding me. You're kidding me. But I don't know why. Because as I thought about and prepared for, I'm going to check my phone. As I prepared for Kiev, so short answer is, so for the next hour, I thought, I can't type, I need to move my other computer, some extra stuff here. No new hardware. Hold on, sorry guys. All right, let's make sure we're all fine. It's my audio. All right, do I sound any better now? Hopefully I sound better now. That should be the microphone I want to use. But okay, so for the next hour, I thought about Disney and their earnings. So what did we know before the market even opened up on Disney? I'm asking you guys. This is training today. We're going through training today. What did you know about Disney before earnings? Huh. Of course, okay. I'll give you that one. It's kind of weak. I'm going to change this a little bit. The sentiment was negative on Disney. Obviously, before the market, if it opens up down, I want to say it was 94 cents, but basically down about $1. Negative sentiment on Disney. Their theme parks have been closed. Their cruise ships, I'm just going to say parked, right? No movies with a less than expected, how would I say it? With a less than expected excitement. than last year. What else could you think of? Anybody? What else could you be thinking of for Disney? Okay, I knew it. I knew they had a huge payment for Fox. And to be honest with you, I wasn't sure if it was this earnings or next. But I knew they had a huge payment due for Fox. So this is where 6 o'clock till 7 o'clock starts. 7 o'clock, down a delicious, delicious Rockstar Pog, pineapple, orange, guava, energy drink. Wife took the daughter to gymnastics. First text to Kyiv. And the first text to Kyiv was Ford new CEO and look at Disney. So let's take a look at Disney. Disney at, so this is 6. Disney oh, come on. Guess I'm going to do that one, which was pretty close. Disney at 607 is only at $16. And so the conversation at 607, what are we going to do with Disney? So I think everyone here, but probably Abraham and Ida, Bill, Dave, David, Lance, Mary, you guys all have Jeff, Rich, Jim. Jim's not here. James, excuse me. James, you guys all have Disney. So the question is, what were we going to do? Do nothing until after the first hour. Why would we wait till after the first hour? Simple trading, right? Simple trading 101. Why would we wait till after the first hour? Perfect. Exactly right. We're waiting for the trend to create itself or to prove itself. We're waiting for the can't think today. We're waiting for the E-minis to clear out. 100% correct. Bingo. That's what we're doing. So, as I go back to my phone, it was a phone call. Looking at today. I had 3 phone calls with Kyiv today. $9:39.08. So this is AM. This is AM. 9:08 AM. What are we going to do with Disney? So plain and simple, this is our morning. This is our morning figuring out what we're going to do. This is our morning going over things. I can tell you, an educator on the education side, you got to put full collars on. I'm like, I don't know. I don't know. But the main point was this. There has been no earnings forgiveness. You miss top or bottom line, you're screwed. You're going down. You're going down hard. So there's no earnings forgiveness. So what would you do? If you knew there was no earnings forgiveness, what would you do? Bill says Boeing can attest to no earnings forgiveness. Everything can attest. There's nothing that's had earnings forgiveness. I thought it was going to be Under Armour. So what would you do with no earnings forgiveness? Would you full collar? We did think that because of COVID-19, maybe there would be more Disney Plus subscribers. First thing we did is we kept our puts where they were at. We're going to lose money on puts. We're going to. No questions asked. We are going to get our butts handed to us on our puts. We might turn it into a put calendar. But the first decision was, you know what? We're going to keep our puts in place. We're going to keep them in the money. We're going to keep them where they're at. It just made common sense. Common sense said, you know what? That's where we need to be. The risk was too great. The risk on Disney was too much. We kept the in the money August 120 puts where they were at. What does this mean? That's a question to you guys. What does this mean to keep the in the money puts where they're at? What does it mean? Of course. I just told you, right? Let me go a little bit more on that. In the money means a higher delta to make more up as Disney falls lower in price. Bingo, I agree. I had protect against bad earnings report. So let's just call it better protection against a bad earnings report. What would we normally do? We probably would have rolled it down and taken some profits or rolled it down to being at the money at 115. Lessen the cost basis. Bingo. That's exactly what it means. We didn't. The risk was too great. We didn't do that. We said, you know what? We're going to be okay. It's stock ownership. We'll have 2.5 weeks. We might create a put calendar. We're okay where we're at. But what about the leap calls? Some strikes had already lost half of their value. So, do we dollar cost average? Do half dollar cost averaging? Do a third? Do a quarter? We really sat here and thought about it. We sat here and we're like, you know what? It's going to suck. Do we wait until after their earnings? So what's the beauty of collar trading? I've said this a million bazillion times. What's the beauty of collar trading? Someone tell me. Someone please tell me, what's the beauty of collar trading? Why do I collar trade? Damn right. So I can be wrong. Bingo. Lance, perfect. So I can be wrong. So for all intents and purposes, I collar trade so my clientele will, in no uncertain terms, get into their head that I am Jesus Christ and that I am perfect all the time. Because you know what? It doesn't happen. I may strive to be. I may try to be. I may sound like it. But I'm never going to be him. And I'm definitely never going to be perfect all the time. So, we added a little, a fourth to a third. We dollar cost averaged in the January 150s, 135s, and maybe one other strike that was down more than half. Now there's one that we didn't. Kind of a unique reason there, but there's one that we didn't. And we can still dollar cost average more tomorrow. Now, won't be at the same price. But plain and simple, we can dollar cost average some more tomorrow. Taking a quick look at orders. Disney was down here, 11.2. That's some more we did in the afternoon. That was afternoon. That was at 3:30. We've got another 28 or so that we did elsewhere. We did some dollar cost averaging. We lowered the cost from some at $8.90 some odd cents. We got it down to $5.61 on average. We did that with our Junes, actually, our biggest group of them. We did do some of these. I've got another group. We did do some of those. We didn't touch the January 22s, and I think we did some of those too. And Keeve's got his that he's done. We nibbled. We nibbled. Plain and simple. We nibbled in case we were wrong about Disney. Now, the neat thing is, we weren't wrong. And if you notice Disney fell after hours. Disney after hours. Looks like it fell more, but 1336. I saw the 1339. So after hours, it fell down to 1339 after closing at 117.29. $4.90. It chunked it. Disney was a chunky monkey. I don't understand this title, by the way, because that's not true. But Disney company took a $3.5 billion hit to its operating income from parks being closed during the quarter. It had mixed earnings. It's supposed to be down 64 cents, right? Well, the real earnings were 8 cents positive versus 64-cent loss. Their revenue, it missed. It missed. It missed by $500 million. Reported a net loss for the quarter on a $4.72 billion charge from their acquisition of 21st Century Fox. It was now. Okay. It missed. It missed in the revenue. The stock tanked. We have not seen earnings forgiveness. We haven't. It's just not there yet. The good news is, if you have kids and like Mulan, you can watch it cheaper in your house for 30 bucks instead of, for my family, $72, right? Beginning of September, excuse me. For 30 bucks, my girls are going to end up watching Mulan. Pretty interesting. Somehow it says in here, last quarter, 57.5 million subscribers. Now has over 1 million paid subscribers. Their big cash cow has over 1 million in subscribers. And it's interesting because I'll tell you exactly when that was stated. Wasn't on their release. That was stated basically right here. Hey, we have over 100 million Disney Plus subscribers. And if you put your cursor over it, it was pretty cool because it went 60 minutes after 6:44, 16. So that's at 2:44, 40 minutes after the market closed. It literally went from 117 to 8 minutes later being at 123.82 on volume of 167,000 shares. And this is per minute here. Unbelievable. 74,000 shares, 76,000 shares, 23,000 shares, 102,000 shares, 70, 61, 167,000 shares, 90,000 shares. It was huge after hours. We got a run on Disney where after hours we got a pop. We got a pop on their streaming services, which really should say there's 100 million subscribers of either Disney Plus, Hulu, and ESPN, but they hit 100 million subscribers to what took Netflix like 4.5 years. They did it in 3 quarters. They beat it. They realized out to 2024. They were giving themselves that 4-year period of time. They are there 3 years and 3 months quicker than they gave themselves time to be at, and quicker than and beating Netflix. They killed it. They absolutely killed it. And they're expecting a goal of 60 to 90 million subscribers by 2024 in this quarter. They did it. They're there. They're there. They're 100 million paid subscribers for their streaming services, which are Disney Plus, Hulu, and ESPN Plus. If you get Disney Plus, you get Hulu and ESPN for free. Some people just chose Hulu. Some people just chose ESPN Plus. Some people like myself say for 160 bucks a year, it's a hell of a deal. They killed it. They absolutely killed it on their cash cow. So what it comes down to, will there be follow through tomorrow? I'm going to tell you yes. Glad we nibbled. We need to adjust long puts or close them out. We need to continue to dollar cost average. It's going to be that simple. It's an easy run. The question or the problem brought to us by a very intelligent student. I won't say his name, so I will not say Bill Brandner because I don't want to tell everyone that's his name. But maybe that student, Bill Brandner, sent a quick text to me today. Kevin, with gold and silver at such high rates, doesn't that traditionally signal high anxiety in the market and the economy? No, it actually signals a market crash, which typically involve high anxiety in the market and in the economy. But it signals a crash. If so, why is the VIX only at 24.31, which really historically it should be in that 15% range, right? Between 10 and 15%. Why is the VIX showing less worry at the 24 levels? Could it have to do with interest rates, possibly giving confidence? I would say no. Are earnings good enough to give a feeling of recovery in the economy? I would say hell no. So what is it then? Let's face it, what is it? I would go ahead and I would say false sense of security with stimulus. I mean, for crying out loud, people, $1,200, $500 per kid, that stimulus, it's not, ugh, blows me away. A vaccine, there is no vaccine. There's an antibody to increase the antibodies that fight off, but there's no vaccine for a virus. My favorite, Bill, plain old stupid people. And we're probably going to pay for it in September and October. It still would not surprise me to see a 20 to 35% drop. Bill made the comment, stimulus will eventually lead to blowback because of the hit on Treasury. Exactly. In fact, you know what the scary part is? Our Fed, after we're going to blow $5 trillion this year, I'm going to have an article that I'm going to show you next Monday on how the Treasury and the government wants higher inflation. We've got to hit our 2% inflation mark. Or another way to look at it is, well, we got to go ahead and help out oil. Comment was just made, you need inflation to be competitive with the rest of the world. I disagree. You need inflation to hold the value of your currency. But when you owe the ridiculous amounts the United States owes, I would want inflation low where your dollar is valued less so that you can pay off your debts, in theory, cheaper. I know theory is scary, but I'd want it lower to pay off the debts. I'd want lower interest rates. And I'm not saying, for me, it would be paid off. For the United States, we're screwed. We are totally screwed. If I was looking at, oh, it's right here. I don't even know I'm doing that. If I was looking at a trade, a shorter term trade, a position I'd want to be in, follow on the coattails of Disney. I really like the June. Why am I doing that? I really like the June leap calls. If I was looking at a position, I'd be right here. Knowing they're going to be more expensive, knowing that it's going to be a while. If I could do 10, I would probably start off with 4. Because we're probably going to have a dip in September, October. So if I could afford 4,500 or so, I would start off with 4. What if it keeps going higher? Well, then I'll make a good amount of return with my 4. I'm okay with that. Why can I not get this the way that I want it? Can't get it the way I want it because it hates me. Try this one more time. If I could do it, we'd buy right here. Neat position to be in. I really like the profitability and loss. Cheap. I know it's going to be more expensive tomorrow. This is the trade I would do. I would get that on and off I would go. I would even add more to positions that I currently have. And I probably wouldn't do it till the close tomorrow. I might really see if Apple's going to hold its position. Why not June 22? Because I don't want to pay that much money. There are some June 22s there, but you don't need to go out that far. Keep it simple, stupid. Run it out to June 21. I'd want to be out of it after Christmas. Want an election, want the Christmas earnings, I want to get out. A June 22 is more expensive. I personally couldn't afford that. Yeah, I don't want to pay more than double. Don't feel like you need to pay that much, which will probably be closer to $11 or $12 tomorrow, maybe not. $5 higher, and then it would be $11 ish, 11.10. So it'll be $11, according to this chart. I kind of feel like I don't need to spend that money, which is kind of funny because I just did June, right? Tomorrow at 23.48, it's going to cost me $5.46 maybe. I can live with that. I'm good. Totally good with it. So that's why I wouldn't go out that far. Any other questions? If not, I appreciate having you guys here today. Welcome to the decision-making process that that Keith and I went through today. It was difficult. It was hard. It was a bugger, but it was ultimately the right thing to do. Could we have done more? Of course. But again, we did enough to get us through. And really the push now is back up to 135. How can we make the most amount of money between 123 and change, 122.31, might be 123 tomorrow, up to 125. That'll be the key. And can we start to protect it at 125 so that plain and simple, we can be ready to make a profit. Ready to make a profit as it falls back down, ready to dollar cost average, ready to maybe get out, maybe to add some long puts and protect dollar for dollar on the way down through the volatility and through what the market's definitely showing us is some worry with gold and silver. Guys, have a great evening. I do hope this was helpful for you. I hope this showed you a little bit about what real life trading is, not an email, not a paper trade. This is it. This is where the rubber meets the road. And it's these type of questions that, in all honesty, sometimes are kind of tough to make. I'm glad we did what we did. We nibbled. We're going to have a bounce back. Let's see some follow through tomorrow. You guys take care. Have a great evening, and we'll see you again Thursday morning. Bye-bye.